Now, Kate Stalter.
Good morning and happy Tuesday to everybody. I had to think about what day it was there for a second. You ever have that happen? Well, as you've noticed, there's some selling today on the major indexes, although we are definitely off earlier lows. Nice if you're a bull. And, of course, as we were joking about with Jim Rohrbach last week, I'm going to recap a little bit of that interview because it really was just so terrific and so informative. It's being attributed, today's action, to some news from China that the economy over there is slowing. Now, is it just me, or does that same piece of news about potential slowing in China seem to resurface maybe every 4 weeks, every 6 weeks, something like that? Maybe when there's nothing new from Europe, the China slowdown worries begin to resurface and send the markets into a panic mode. Now, if you were listening the other day and you heard some of those terrific comments from Jim Rohrbach, you know we were talking about all the big market moves being attributed in the media to this or that. You know, China is a convenient excuse. Why not? It does matter for world growth, no question. I mean, we just saw that news from Caterpillar, I believe it was yesterday, just about some of their potential growth. It was funny because I saw somebody posting on Facebook. It was kind of silly. They said, well, there's no construction. You look around, you don't see any. And I'm thinking, well, no, because they were talking about China. They weren't talking about construction in your neighborhood, although I do see quite a bit of construction in my neighborhood, but that's a different story. So, yeah, China does matter for world growth, no question, but it's kind of interesting that there's always the explanation du jour. And Jim Rohrbach last Thursday had a lot of great things to say on that topic about using technicals to make your decisions. I know that's a message that the TFNN audience hears gladly, so that's why it's really fun to be here talking with folks. Now, if you missed the interview with Jim on Thursday, I really recommend that you go back and listen to it in the archives. Jim has been a successful market timer for 40 years. He had a lot of words of wisdom. And one of my pet peeves that he touched on is that most retail investors and traders should not be shorting because so many people can really just not know what they're doing and go into that based on an opinion that may or may not be right, because you can really make big mistakes there, much more so than when you go long, and lose your shirt if you don't know what you're doing. And I know that Bill O'Neill at IBD, and as I mentioned before, I was over there for 10 years, he always recommends that investors master the long trade before going short, and you never, never short in a bull market. So Jim had some comments on that front. Wanted to also talk about something else that he was commenting on, and that's the overuse of fundamental analysis in the popular media. And that's something that I'm really becoming more and more conscious of. It was interesting that Jim brought it up because it had been something that I've been thinking about. You know, I took all those, well, not all, but quite a few of those academic corporate finance courses, and I can tell you unequivocally, the people who become the investment bankers and the analysts who go on TV and pontificate about their grand fundamental pronouncements, a good number of them would not know the first thing about a stock chart. Now, the graduate level finance classes really focus only on the detailed fundamental analysis, which, in my view, is why you see this obsession with PE ratios and whether or not a stock is overvalued. I mean, they've just taken a number of courses in that, heard that over and over again. There is, in my experience, zero financial education in the MBA programs about stock selection using technicals. There are portfolio management courses, but they are taught very much from an academic or institutional slant. And I'm not saying that knowledge is bad. I don't mind people having that background. The knowledge and the education are a great thing, but without any sort of balance with the technicals, which historically many of the academics have really looked down on, that's why you're not getting the practical picture of investing and trading from a lot of these people that you hear in the major media giving their analysis. And that's why you have so many investors parked in losing stocks because they have so-called good fundamentals, which often boils down to just a PE ratio, not even anything practical like sales growth that's reflecting demand. So that was just a little rant this morning, and somebody is saying London School of Economics teaches tech analysis. That's what somebody's saying in the Tiger Den over here. I think it's becoming more and more common. I believe it's being introduced. And it's interesting that you're pointing out that's in London, because certainly in the U.S., the bias does remain PE ratios. That just seems to really be the focus and the obsession, and making investment decisions based on that. Now, we had a couple other little chats going on this morning in the Tiger Den that I want to just address here briefly. We had a couple people commenting on stock here called Cosi, and I do know this company. I've seen this restaurant chain, and this is a company. It's actually very low price stock, lower than I like to get into. Let me fix the camera there. We got a little. There we go. So this is actually lower price than I personally like to enter, but it does look like one of our friends there in the chat room was able to get in on this at a very low price, and around 68 cents a share back when a new CEO was named. Let's see, that looks like that happened back in late December. So some nice action in that particular stock. Nice moving average cross. You can see that right here. That is the kind of action that I look at. Nice support there. And this is on a weekly chart. So you see nice support above that 10-week moving average. So looking pretty good on this particular stock. This is a very small company. Got a market cap of about only 61 million. Looks like volume has picked up recently. After you did see that new CEO being named, you can see the heavy volume bars up here. I've got a 10-week moving average line running through the volume bars, and you can see there have been several weeks here of heavier than normal upside volume. That's what you want to see. Volume was below average on these weeks where it did kind of dip down here. You did see some traders taking some profits. Now, just be careful. The reason I don't particularly like, and I'm, great trade that our friend in the Tiger Den got into here. I'm always just a little bit more leery of some of these extremely lower price stocks because they are not institutional quality. They can be just extremely volatile because there are so few institutional owners. It can only take one guy to decide he's going to pocket the profits, he's going to go into something else, nothing at all wrong with the company, no news in particular, he's just deciding he wants to pocket some profits. That can shake you out. So that's just why I do use a little more caution and urge a little more caution with small caps in general, actually, but particularly with something of this nature. But anyway, yeah. Pretty interesting. Then we had another question about what, here on the Small Cap Roundup, what size of market cap are we looking at? Now, I tend to be looking at stocks really kind of under the 2 billion level at the time of purchase, but I know that a lot of the indexes, they're looking at stocks below the 3 billion level. So, you can kind of fudge that a little bit. Everybody has some different definitions of that. So that's that, but that's kind of, I tend to do my initial screens under about 2 billion, but I'm not going to dismiss something if it has a market cap that's higher than that, because that's where some of these institutional investors are going to be looking, and of course where some of these stocks that are indexed to the Russell or the S&P 6000, that's where you might see some of them. Okay, so let's see. I've got a few minutes here. Wanted to just talk a little bit. I was checking some of the consumer discretionary names. And here again, where it's kind of funny that you really have to do some looking at what the data, what the market is actually showing you, rather than what all the prognosticators want to say. Because how many weeks now have we been hearing that higher fuel prices are going to hurt discretionary spending? And, we hear that over and over and over again. But interestingly enough, the consumer discretionaries continue to be the top performers in not only the S&P 600, but also the S&P 500. So that's pretty interesting. So I was taking a look for a story I was doing for realmoney.com over at the street. And I was taking a look at some of the consumer discretionaries. Now let me show you this one. And again, it's so interesting how you really have to keep your opinions out of things. So this is Men's Wearhouse. MW is the ticker. And let's see, let me just refresh my memory as to what the market cap on this one is. Okay, so this is about 1.9 billion market cap. Some decent liquidity, moves let's see, about 670,000 shares a day. So you've got some good liquidity on this one, not too bad. Well-known retail chain. So what's interesting about this, and again, to be a little bit counterintuitive, you would think, wow, this is a company that sells suits and nicer clothes, not the kind of thing you run into Target and pick up a T-shirt, right? And you think, okay, we're in this weak economy where people aren't needing as much office wear, and even when it comes to office wear, isn't everybody going more and more casual these days? I mean, there are probably fewer offices where people are actually wearing suits these days than business casual. So it's a little bit counterintuitive, but nonetheless, take a look at this stock. So this has some nice chart action. I want to expand this a little bit, give you a longer term view so you can kind of see some of the bullish action right here that has occurred. So you did have a previous pullback right over here. Then you had some action that undercut that, and that began, let's see, yeah, this big pullback right here did begin last summer. I remember this very, very well when all this was happening last summer. So like most stocks, a lot of the small cap names that we look at here, Men's Wearhouse did correct along with that. Now you do see, let's see, it had the high before it pulled back over here of 36.44. So it cleared that pretty decisively right back here. Now, you did not really have the kind of volume you'd like to see. It didn't come in above average, but it was a little bit heavier than the prior week. So you did have some heavier volume, moved higher. Now look what it's doing as it corrects. Nice orderly correction, still holding well above that 10-week moving average. So, and the reason that this one caught my attention is because it is a component of that S&P Small Cap 600. So when we come back after this break, I'm going to take a look at a few more of those, and we have some great guests coming up too later in the show. Pamela and Marianne Aiden of the Aiden Forecast. A lot of you may know of them. Really looking forward to hearing from them a little later in the show. I'm Kate Stalter. This is the Small Cap Roundup. Be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of the money game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, Fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Okay, back with our next segment here on the Small Cap Roundup. I put up a chart of Select Comfort. SCSS is the ticker. Now, this is a stock pretty sure I've talked about this on the show a few times before, just because it's one of those that I've been continuing to track. And I know I've talked a little bit about the newsletter that I'm very excited that we're going to be launching in a few weeks. This is exactly the kind of stock that we would be looking at as one of the holdings that we would be tracking. Again, here we've got one of these market caps that's approaching the 2 billion level. And let's see, this one here right now, market cap of about 1.8 billion. Good liquidity on this one. About 1.1 million shares traded a day on average. So this one obviously, though, has come to the attention of more and more institutional investors over time. As it's trended higher, that's what sends it higher, folks, is the institutional buying. It's definitely, even as much as you or I as individuals can load up on shares, there are very few individual investors who really do have the firepower to move the needle on most of these stocks, unless it's one of those very, very small ones, of course. But in most cases, what you're seeing here is institutional buying on these. Now, what I like about Select Comfort, I mean, this is really not offered a buy point here. Well, maybe right back here if you were an aggressive investor and wanted to come in above as it cleared this previous high of about 27.59 back here. I like the fact, though, that we might be seeing the beginning of some kind of chart consolidation here. You definitely do need some kind of pause that refreshes on these stocks here. Now, what was good, again, we were just kind of looking at Men's Wearhouse and the decline, the consolidation that happened last summer. Let's take a look at what happened here on Select Comfort, something very similar. There you have that big decline that week in August when everything pretty much broke down. And you see here nice support right along that 40-week moving average, and that's roughly equivalent to the 200-day average on a daily. So that's another good line of support to watch. So you did see that despite that choppy, volatile, just terribly pessimistic market conditions we did have in the late summer and the autumn of 2011, you did see nice support there at that 40-week line. Now, what was interesting about this consolidation, you notice that it did undercut the prior low, the low of the prior consolidation. So that was pretty nice. You did flush out a lot of the buyers, a lot of the holders rather, lacking in conviction, set the stage for some new money to come in, grab some shares right in here. Look at that big volume on the move higher here, exactly what you want to see. Now, this isn't unusual, what you see here. You did see that big move up, and you might kind of look at it and intuitively say, well, that really didn't work out, because look at that. It pulled back again. That's very common for a stock to make one of these big moves up, clear a technical buy point, and then to pull back again. This one did find nice support, again, right at that 10-week average. The reason that these do tend to work, and we've had some of the fund managers on the show who have talked about this a little bit, talked about the fact that, yes, they do come in and look at some key levels when a stock does decline. They want to come in there, support an existing position, something that they're already holding, and grab some more shares at a lower price. And the effect that has is, as they continue buying, sending the stock higher again. So this has really shown some nice chart action on this particular chart. I really like what I've seen here on Select Comfort, and could be that it'll pull back and offer a nice buy opportunity sometime again in the not so distant future. So that's one. Let's see here, a couple more that I wanted to take a look at today. Well, here's an interesting one. This is an interesting ticker. It's WWW, and no, this is not any kind of internet stock. This is a shoe company, Wolverine Worldwide. It makes a lot of those outdoor boots. What are some of its casual shoes, outdoor footwear? I'm forgetting. I think Wolverine is one of the popular brands, but they do market their shoes under some other brands as well. But in any case, that's what this particular stock is. I just think that ticker's kind of funny. Tell you what, we're going to come back, look at some more stocks later on in the show, but before that, we've got the Aiden sisters coming up. So stick around after the break, and they will be right here to share some views on precious metals. Maybe we can get into a little bit of discussion about the bond market, something else they follow. This is the Small Cap Roundup, and I'm Kate Stalter.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more, and that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion, and for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk, and you get all the benefit. Go to the homepage at tfnn.com and sign up today.
Hi folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to tfnn.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney Financial Advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Welcome back to the Small Cap Roundup. So we are attempting to get our guests on the phone. They're actually down in Costa Rica, which is pretty amazing. And I know we did exchange some emails yesterday, and they confirmed for this time, but it looks like there might be a little confusion with the folks who answer their phone. So hopefully we can get them on the phone today, and if we don't, we'll do it another day. We'll make this happen because they are just so terrific, and really want to hear them. Now, I was looking at Wolverine Worldwide here before we went to break, and you do see what's happening here. Another one of these examples, and you just see these over and over and over again. I just keep pulling these up here on the show. I do see right here where you have the pullback, and again from last summer, that it undercut this the previous consolidation right over here. You do see some lows undercut that, again flushing out some of those traders and investors lacking in conviction about the stock. Now this one here could be showing some potentially bullish action, pulling back right here, again getting moving average support well below, of course, the prior high. But you could be seeing an intermediate buy point right over here above 40.76. And that could be something where you could enter a position. Now, again, you did have this bullish cross right here. So for more aggressive traders coming in right over here, you've got the moving average support between this and the prior high right over here. And you could, if you are more aggressive but are willing to understand when it's time to cut your losses pretty quickly, could offer an opportunity to get in there and go ahead and make a buy. Now, one of the things when I do, I think I mentioned, let me actually pull up one more here that I was looking at that was one of these leaders from the S&P 600 that I was taking a look at. Now, this is Coinstar. and of course well known as the Redbox company, and this thing is just in the news all the time of, you know, whether the cable companies are going to be introducing their own more extensive video-on-demand libraries, what's happening with Netflix, you know, what's happening with Amazon, with Apple. So you just see all kinds of speculation and conjecture about what that means for the Redbox business. You know, the fact of the matter is it has shown some pretty good track record of earnings and sales growth. And I know earlier in the show I was commenting a little bit about the over-reliance on fundamentals. The couple that, there are a few that I just tend to take a look at just to make sure the business is sound, that there's enough there to attract the institutional investors. And the earnings and sales growth is definitely one that looks... That is one that the institutions do tend to look at. They make a lot of their decisions based on that. So that is something that I tend to track just to make sure that there is some solid business still going on there, that the institutions are going to jump in. So in any case, Coinstar is traveling higher right here. It is below, let's see, we have... So yeah, so you have more than, actually your 52-week high is back here from July, so it did cross over that 52-week high back here. Not really in a buy range at the moment. It looks, it's a bit extended from any of the most recent buy points. I'd be looking for a little more of a consolidation right here before taking a position. This stock has a beta of 1.1, so kind of on the high side. A lot of this kind of sloppy trade really just doesn't bode too well. And you can see the stock has had trouble. It's hit resistance at numerous points along the way. I think it's a lot of this kind of news-driven stuff that people tend to panic when they hear about this particular company and what's going on in that business. So that's a little something just to keep an eye on with this particular stock. Not really one of my favorites at this point, but could offer a buy opportunity. I don't really like to interject opinion, but you do have to give a critical look to some of the possible strengths and weaknesses on any individual chart. So let me see here. There's a stock that I've talked about quite a lot. Oh, let me give you a little update here on the Aiden sisters. Apparently their office cannot find them. So there was obviously some kind of snafu, because they did email me last night that they were expecting a call at that time. So there's obviously some sort of little communications glitch going on, but we'll get them on the show, because I know they were very excited about coming on here, and they are just absolutely terrific. So there was obviously some kind of misunderstanding. So I'm getting asked, do I follow Vera Bradley? Yeah, I know they just reported, and I do like to track IPOs. Okay, I'm going to just say there is nothing on this chart that interests me right now. This is, you know, the old expression, we're looking at Vera Bradley, VRA is the ticker on that one. You know the old expression, don't try to catch a falling knife? Well, that really applies in the case of Vera Bradley. Now, what I like to do is I do track recent IPOs, because a lot of times, not always, of course, but many times they do tend to be some of the market's best leading stocks. And that's because, you know, we talked a little while ago about, for example, the new CEO over at COSI. These companies are young, they're new to the public market, management is bringing some fresh ideas to the table. There are just a whole lot of reasons here why these particular stocks can offer some terrific price action. Now this one, you notice, let's see here if I can, well, it went public, let's see, back in October, so I'm not really able to get the full chart on here on a weekly, but pretty much, if you're looking on Tiger TV, back over here, I can get sort of the later part of October, and that's fine, because it does show you the stock had a nice post-IPO run-up, very typical. You do see this. And that's often a case where you see a lot of people wanting to jump in. Then you see the post-IPO little correction. Also, very typical, which is why it's often a great idea to just wait this out, get in here at the next buy opportunity. Now, you see, that did occur. You had some opportunities to get into this stock back in the earlier part of last year, about a year or so ago, and rallied higher. Now, there were some, let's see, I'm going to see what I can get here on a daily chart of Vera Bradley. And let's see what we're getting back here. Okay, let's see here what I can do. I'm just going to expand this. Okay. So you do see you had, before the big gap down, you did have some indications that it would have been a wise idea to maybe take some profits in this particular stock in the earlier part of 2011. You do see that it fell below fell below the 10-day moving average, and then down here below the 40-day moving average. So even if you'd been looking at that on a 50-day chart, you would have had some opportunities out here to take some profits after it pulled back from that high. Okay, so that's this is a pretty interesting company. I'm going to put it back on a weekly chart and just kind of reiterate what I was saying at the beginning. Right now, no support, and I'm not going to risk jumping into a stock, trying to pick the bottom on this thing. Let's wait till it sees some renewed buying rather than this heavy volume selling, and see when we can get an opportunity to enter this on strength when the institutions begin to have a little bit more confidence. That's what I was talking about a few minutes ago, that it's the institutional buying that sends these stocks higher, and that's the kind of thing that you want to be looking for, really to be riding their coattails rather than trying to be predicting what a stock might do based on some kind of personal opinion, or again, one of these fundamental prognostications from one of these analysts you might see. Okay, let me see here. Let me just move on. I want to take another look at another one. Now, I've spent quite a bit of time on this particular stock, but it really is a very interesting one and worth continuing to take a look at. This is Francescas Holdings. We looked at this one on the show last week. It made a huge jump last week after that earnings report, 21% higher. Volume was more than twice the average. And of course, it wasn't just necessarily the better than expected quarterly report that really moved the stock. It was the bullish outlook. So, and that is something to really pay attention to. Now, this is another of these kinds of small cap names that are exactly the ones that I tend to track. Now, prior to the report, the company had been showing some price potential. We were talking about this just recently right over in here. You see where it kind of was getting support above that 10-week moving average, so definitely was showing some solid action. You can see that even though there was some selling, it rallied back, and then the institutional buyers were holding ahead of that report. And you often do see that, a stock just kind of treading water ahead of the report. That could be a good sign. But again, as I really like to emphasize on here, be careful about jumping into a position ahead of the earnings report. I mean, of course, have I done it over the years? Yes, and sometimes been quite successful with it, and other times you can really, really get punished if there's something in that report or in the outlook that the institutions don't like. I mean, it can even be something that doesn't even make the headlines. Something, for example, buried deep into the report that commodity costs are rising, margins are getting squeezed. Exactly the kind of thing that maybe as an individual investor you may not really factor into your analysis, but again, some of the institutions do, and that does matter to them because that could mean that those earnings are going to slow, and that's not what they like. However, in this case, you did see some terrific action after that report. Now, this one is holding on right now. I want to go over to a daily chart right over here. And this is worth taking a little look at. I'm actually going to make the chart. No, that's not what I wanted to do. Let's see. Okay, I'm just going to keep this right here like I have it in on Tiger TV. Now, you see you had the prior high after that big gap up on the earnings report. It rallied to an intraday high of 32.32 on March 14th. And then you see pulled back, very typical. Again, not at all unusual to see that a stock will pull back a bit after that. You do see some traders taking profits. Absolutely normal. Now, it is hanging in there right now. You can't say for sure what's going to happen in this particular case. You might have some kind of little more extended pullback here as the stock digests some of these big gains. And again, that you do see some more of the traders pocketing some profits, people who came in, say, in this little pre-earnings run up and now taking some of those gains and moving on. However, for a more aggressive investor, you can see I'm showing you this on a daily chart, so you can see how far this is above its 10-day moving average right now. So for a more aggressive investor, if you are really prepared that you are going to cut your losses quickly if need be, there could be an entry opportunity even right now in this little correction, little area of consolidation below that prior high. So, but again, that has to be something that you need to be prepared to act quickly. You really want to see continued support above this low of 28.50 right here. By all means, you don't want to see it go below that, and you want to make sure that you cut your losses maybe 5% or so below your purchase price. I haven't done the arithmetic on that, but the point being that you do need to be prepared to cut your losses very quickly if necessary if you're going to be an aggressive buyer on this particular name. I think I have a little bit more time right now. I guess they were maybe not able to get a hold of the Aidens down in Costa Rica, but we'll definitely try and connect with them at some other time. Let me go to a weekly chart here. It's March Madness, Buffalo Wild Wings being in the headlines here. There we go. Get you a little better chart right there of Buffalo Wild Wings. Now, this is one I was just mentioning, kind of what the analysts are always fretting about on this particular stock. The price of chicken wings is always something that gets a lot of attention and can send this stock kind of moving in one direction or another. But this has also been a good performer. You notice, obviously, you have this terrific move up right back here, and that, again, was after earnings. Now, this one, let's see here. Last week, pulled back a little bit after Wedbush downgraded the stock on some concerns about those chicken wing costs. I'm kind of, again, liking this area of consolidation right here. So this could be something to keep an eye on. I think this could offer a new buy opportunity pretty soon. Okay, can't believe this segment wound down so quickly. Stick around. We'll be back with the last segment here on the Small Cap Roundup.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio. Therefore, we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Last segment on today's Small Cap Roundup. These shows just go ridiculously fast. It's only 1 hour, but really have fun being here with everybody, really enjoying the conversation in the Tiger Den today. It's a lot of fun we're having in there today with our little comments that we like to make. So let's see. We had G7 in there, was asking about Apple, and what can you say? what can you say? It amuses me to listen to all the naysayers, the haters, whatever you want to call the people who are so negative on Apple. It really, watch what the chart is doing. I mean, the chart is showing you where this thing is being valued. And, somebody is just asking about top pickers. Well, that's let me just, I'm reading the comments here in the Tiger Den in real time. Top pickers, it could use a pullback, though. I agree. In fact, I believe I typed that into the chat room a few minutes ago. I am eagerly awaiting the next pullback on Apple, and there will be one, of course, and it will be accompanied by the inevitable predictions that you will hear over and over again about, is it over? Is this the death of Apple? Yeah, I just don't listen to that stuff, because a lot of these professional gurus that are out there in the media, if you really focus what a lot of these prognosticators say, they're really wrong about many things, but nobody seems to care. Now, there's a guy I like that I've interviewed, and he is not a market predictor. His name is Kevin Martyr, and maybe some of you have read his commentary on Market Watch. And if you haven't, I really recommend that you do. Kevin is just like Jim, who we had on the show. I talk about, in fact, Kevin is good friends with Gil Morales and Chris Catcher, who I talk about often. Just a lot of these very well-known trend followers. Kevin is a disciple, shall we say, to use the Morales and Catcher word, of Jesse Livermore. So, Kevin has a comment in his recent column on Market Watch. Let's see, I kind of summarize this because I only have a couple minutes left. Despite the lustrous sheen, and I'm reading what he wrote, despite the lustrous sheen attached to market proceedings these days, it is to be noted and is emphasized that most leading glamours, and that's what he means by, Apple, Lululemon, Ulta, these growth stocks that just rally higher, are materially extended from their most recent basis technically. That's obviously true of Apple. That means that entering most of these at current levels does not represent an attractive risk-reward trade-off. Thus, an intermediate-term speculator should go easy on fresh money buys. Yeah, I do agree with that, because so many of these are extended. He goes on to say, in time, these may likely offer better entry points as some of the early adopters cash in profits, that's what I've been saying, and exit their positions, pressuring the shares. These better entry points may, unfortunately, be at higher prices than those at present, but the risk-reward ratio will be more favorable. So there you go. That's the whole idea of tracking these stocks and watching for a pullback and getting into an entry point that is that is more favorable for the individual investor. Yes, it's higher than it once was. And Kevin goes on to say the cost of getting entry into these growth stock leaders at just the right time does not just mean at lower prices. More importantly, the right time means entering at proper pivot points defined by Livermore, the point at which the price has the greatest probability of upward movement. And obviously, that's not only applicable to something like an Apple, one of these large cap liquids, but all of these small cap growth names that we look at here on the show and in the newsletter. All right, Tom Petty is telling me it's time to go. Thank you so much. I had a lot of fun with you guys today. Great conversation in the Tiger Den. We will be back on Thursday with another edition of the Small Cap Roundup.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of